It's decentralized, it's fully transparent, and he couldn't control it. He was trying to control the crypto world, master of the universe. And that was a recipe for failure. It's been most unfortunate because so many people have been hurt because of it. But I do think the big lesson, and even the newest SEC commissioner is saying, you know what, we really have to double down on this idea of decentralization and transparency and help to propagate this new world with the right kind of regulation.
Unfortunately, history is repeating itself, right? Unfortunately, look, the reality is that there's Bitcoin and there's crypto, right? And you should be skeptical of crypto, right? Crypto is a continuation of, the legacy system, right? Unfortunately,
and just for the viewer who doesn't understand, cryptocurrency is an overarching term. Bitcoin is a cryptocurrency, but not all cryptocurrency is Bitcoin.
Correct. Yes. And you have to define what the difference is between the two, right? Because I could say anything I want, but what's really the fundamental difference? Cryptocurrencies are inherently centralized, right? They're controlled by a group of individuals. Bitcoin is not controlled by anybody. There's a set of rules. The protocol is what it is. The issuance rate is what it is, and it cannot be changed, right? And because it's like that, it protects the individual user of Bitcoin. And if you compare that with whether it's crypto or how our current financial system works today, there's a bureaucratic elite. There's an elite group of people that get to change the rules to benefit themselves, So that's what Bitcoin's all about. Now, to go back to your original question, right? If you look at the FTX blowup, if you look at the Celsius blowup, if you look at all these exchange blowups, if you've been chasing yields, if you've been sending your crypto, if you've been sending your Bitcoin to those exchanges to get a 6% yield, right? And in the process of doing that, what you're doing is you're giving up custody of your Bitcoin. Of course, it's going to affect you. But if you've been listening to what the true Bitcoiners have been saying, with the Bitcoin, what we call ourselves in the space, the Bitcoin maxis, the only thing we advocate for is to earn Bitcoin, mine Bitcoin, buy Bitcoin, and take that Bitcoin into self-custody. If you take that Bitcoin into self-custody, none of these blowups would have affected you.
Right, because I've wondered about this. You read about these exchanges and they functionally are sort of like banks where you park your Bitcoin. Bitcoin, to those who are not aware, is not a coin. It's just a set of numbers. It's a very long string of numbers. I could put them on a USB drive and put them in my safe. My literal steel safe in my house. I could write them down in a notebook if I really had the patience, right? I don't have to be storing Bitcoin on these places that seem to explode and disappear overnight.
Absolutely. And that's what makes it so radically different, because we've always had to outsource the storage of our wealth to a third party. And what makes Bitcoin so unique and so different is that you hit the nail on the head, Scott, right? You can write down a 12-word seed phrase, and in those 12 words, theoretically, you could store millions, billions, and trillions of dollars just by writing it down. And that fundamentally changes everything. And it also empowers individuals, right? The likes of which I've never seen before. If I live in a totalitarian country, for example, right? Or in a country that has high inflation, right? For the first time, I could choose to opt out of the financial system entirely. And now, for the first time, I get to choose. I get to keep all my work, right? It's not being stolen from me either via inflation or a tyrannical government, right? That's what makes this so unique. And that in itself, the ability for a human being to store their wealth by either memorizing a 12-word seed phrase or writing it down, is going to change the world completely.
Sam Bankman-Fried is really becoming the industry's lifeline during a crisis lately. I'm fascinated, endlessly fascinated with Sam Bankman-Fried's role in all of this.
You've been now described as the JP Morgan, if you will, of the crypto business.
A lot of people called you the savior of crypto, the patron saint of crypto.
The Michael Jordan of crypto, if you will.
Sam Bankman-Fried.
Sam Bankman-Fried, the JP Morgan of
Fried. SBF, JPM.
Do you know SBF? I think it's cool that the guy has just initials, SBF.
Some on Twitter calling him the hero right now of the industry. There's comparisons to Warren Buffett back in the financial crisis. Or if you go way back, JP Morgan in the panic of 1907, bailing out the banks before the Fed was even created.
Sam Bankman-Fried is trying to play the role of JP Morgan. The original JP Morgan.
One key figure we've talked about has emerged to help stabilize the ecosystem. That is Sam Bankman-Fried.
We talk about him a lot.
Yeah.
Sam Bankman-Fried.
Fried. Is he the Jay Gould of our era, or is he the JP Morgan of our era?
I think it's yet to be determined. Yet to be determined.
Is he Vanderbilt?
He could be.
Is he Harriman?
Possibly.
Is he the credit mobilier scandal?
Is he Carnegie?
The aforementioned 29-year-old gazillionaire, FTX founder and CEO Sam Bankman-Fried. I love you, Sam. I'm just jealous. It's nothing against you.
The CEO, though, lives a relatively understated life. For a billionaire, he drives a Toyota Corolla to FTX's offices in the Bahamas. He lives with 10 roommates and a golden doodle named Gopher. Sometimes sleeps under his desk on a beanbag chair as well.
You aim toward a more sophisticated level of investor than some of the other platforms do. Fair point?
Well, Sam, thanks so much. It's such a fascinating conversation. That's Sam Bankman-Fried of FTX.
Sam, don't be a stranger. We love you here on CNBC. Come around, talk to us more often about your thoughts. A lot of other things to talk about.
We love checking in with you too, Sam. Such a good spokesperson.
Questions remote to that they probably need to show up in person. So that's our issue, certainly not the witnesses. I want to express my gratitude.
Thank you very much. Chairman Brown, Ranking Member Toomey, and members of the committee, thank you for inviting me to testify about crypto and the collapse of FTX. I'm the chairman of OShares, an ETF indexing firm, and also a private equity and venture investor. I support entrepreneurs at every stage of their journeys. I have dozens of family-run businesses in our investment portfolios. My extensive social media platform enables me to tell the stories of their products and services to help reduce their customer acquisition costs. It's a model that has worked well for over a decade and helped support so many small American businesses, which create over 60% of the jobs in the American economy. In 2017, I was a public critic and skeptic of crypto and blockchain technology. As the global regulatory environment began to open up in 2018, I began to invest. Now I am a shareholder in multiple companies involved in crypto technology, including WonderFi BitBuy, the largest and first regulated broker-dealer crypto exchange in Canada, Immutable Holdings, a developer of NFT technology, and Circle, the company that brought USDC stablecoin to market. I've also invested in multiple crypto tokens, infrastructural level 1 and level 2 blockchains. I am of the opinion that crypto, blockchain technology, and digital payment systems will be the 12th sector of the S&P within a decade. Many of these technologies are going to disrupt the existing financial services sector with faster, more efficient, more productive, and more secure ways of investing, paying, transferring, and tracking assets. As you are aware, Bitcoin, a store of value, is not a coin. It's software. Ethereum is software. Blockchain is software. In the last 30 years, every American enterprise has driven major efficiencies using various versions of enterprise software, and crypto is no different. The potential of these crypto technologies is astronomical in scale. In August of 2021, nearly 3 years after I started allocating capital to the crypto sector, I entered into an agreement with FTX to be a paid spokesperson. I was paid approximately $15 million for these services, plus approximately $3 million to cover the portion of the taxes due. Of the remaining amounts, approximately $1 million was invested in FTX equity and approximately $10 million in tokens held in FTX wallets. The equity is now most likely worthless, and the accounts have been stripped of their assets and, interestingly, financial records. I've written them all off to zero. Because I was a paid spokesperson, however, I never invested any capital from our partners or LPs in FTX. The capital lost was from an operating company that I had 100% ownership in. I'm using my own capital to pursue record recovery of the FTX accounts so I can conduct a forensic audit. The truth of this situation will be discovered by following the transaction trail after obtaining the records. I've applied for membership on the FTX Creditors Committee in connection with the bankruptcy proceedings because I feel obligated to pursue the facts on behalf of all stakeholders and believe my perspective of this situation will be helpful to the other creditor committee members. The collapse of FTX is nothing new. While this situation is painful for shareholders, employees, and account holders, In the long run, it does not change this industry's promise. Enron came and went and had no impact on the energy markets. Bear Stearns, Lehman Brothers' demise, had no impact on the long-term potential of American debt and equity markets. I'm only one of many investors that have experienced this loss. However, this changes nothing in terms of the potential of crypto. In fact, the recent collapse of crypto companies has a silver lining. This nascent industry is culling its herd. Going or gone are the inexperienced or incompetent managers, weak business models, and rogue, unregulated operators. Hopefully, these highly publicized events will put renewed focus on implementing domestic regulation that has been stalled for years. Other jurisdictions have already implemented such policies and are now attracting both investment capital and highly skilled talent. In the U.S., we are falling behind and losing our leadership position. I understand why many leaders in the banking industry are open skeptics, calling for the banning of these new crypto software technologies. Disruption is always uncomfortable at first, and entrenched businesses abhor new competition. But it has been proven time and time again that disruption is absolutely necessary in advancing the economy. There is the risk of investing in crypto, and then there's also the risk of not investing in it and letting others accrue its benefits first, essentially gifting them a competitive advantage that could be very, very hard to recapture. So where to start? We need to clear policy and regulation for the crypto industry, its entrepreneurs, its developers, and its users. Congress should start by passing bipartisan legislation that creates a sensible regulatory framework for digital stablecoins backed by the U.S. dollar. Why? A well-regulated stablecoin backed by the U.S. dollar and other high-quality liquid assets could become the global default payment system over time. The U.S. dollar already denominates the price of oil and other commodities. Why not everything else? What could be more bipartisan than this? Let me close with this. We need to get to the bottom of what happened with FTX, but we can't let its collapse cause us to abandon the great promise and potential of crypto.
Thank you, Mr. O'Leary. Ms. Schulp, welcome. Last question, again, if you would answer as close to yes or no as you can. I want to talk about solutions. FTX, like other crypto firms, perform multiple roles in crypto trade. It acted as an exchange and as a broker. It provided margin to investors. FTX was essentially on every side of every transaction. Combining these functions undermines the fundamental regulatory checks and balance that exist to protect consumers and to protect our financial system. Should there be, my question, starting again with you, Professor Allen, should there be strong rules addressing related party transactions and creating firewalls between related entities?
Absolutely, to address conflicts of interest.
Thank you. Mr. O'Leary?
I find the analogy of crypto to be that of gambling and speculation interesting. That was exactly what we described the New York Stock Exchange 150 years ago. And what happened was, because of the nature of the risk, we regulated it. We did it for bonds. We called them securities now. Back then, they were speculations, no different than this nascent industry. The reason this is happening over and over again, and we'll be back here again soon when the next one blows up, is the lack of regulation. That's why we regulate stocks and bonds. They are speculations too. You speculate the profits of the companies underlying those securities. We need to regulate this. I mean, this premise that it's some kind of different issue, it's not. It's just unregulated Wild West, and it will go on and on and on. It's the definition of madness is expecting a different outcome. I mean, that's just, it needs regulation. That's it.
I take it that's a yes, that there should be strong rules addressing related party transactions and creating firewalls.
A long yes.
Requirements for an issuer, that there should be a regulatory regime for secondary market trading. But I think we ought to make it specific to this sector, because to try to shoehorn it into decades-old legislation that deals with different instruments, I think is very problematic. Mr. O'Leary, it seems to me that tokens are very often the tool or mechanism to incentivize people to validate and maintain a distributed ledger. Now, you can gamble with them. You can speculate as to what a given token is going to be worth. But it seems to me that underlying blockchain technology is potentially extremely powerful, is actually already being used in a variety of ways. Could you address this notion that the only possible use is a zero-sum gambling enterprise?
No, I don't agree with that at all. It's preposterous to say that. The potential of blockchain technology in authenticating physical assets and contracts and tokens, as you suggest, is incredibly powerful. In fact, I think what's going to happen as we peel the onion on FTX over the next year or two is the shining outcome of the success of the blockchain to track these assets will become the focus of everybody. We will realize every security or token that left FTX, left Alameda, got traded between shareholders, all tracked irrefutably on the blockchain. The power of this technology is very harnessable, very powerful, and of course we should lead the world in it because so much of it is developed here. The hottest hands coming out of MIT right now, where do they want to work? A third of the class. They want to work on the blockchain. You can't take that much potential and not expect extraordinary outcomes. This is a remarkable technology. Yes, it requires regulation, but if you just ask where the hot hands are going, the great engineers, this is where they're going. So, we train them here, and then we kick them out of the country so they do their work somewhere else.
So let me ask you directly. You were an investor in FTX, and I know you've spoken frequently with Sam Bankman-Fried over an extended period of time. Why do you believe FTX failed?
I have an opinion. I don't have the records. Here it is. After my accounts were stripped of all of their assets and all of the accounting and trade information, I couldn't get answers from any of the executives in the firm, so I simply called Sam Bankman-Fried and said, "Where is the money, Sam?" He said he had been refused access to the servers. He no longer knew. I said, "Okay, let's step back. This is a simple case in my mind of where did the money go?" And I said, "Sam, walk me back 24 months. Tell me the use of proceeds of the assets of your company. Where did you spend it?" And then he told me about a transaction that occurred over the last 24 months, the repurchase of his shares from Binance, his competitor. I didn't know this at the time, but at some point, CZ or Binance, who runs Binance, purchased 20% ownership in Sam Bankman-Fried's firm for seed stock. And then, over time, and I asked him, what would compel you to spend $2 billion was the number he was giving me at that time. Later, in a subsequent conversation, about 24 hours later, he told me it could have been as much as $3 billion to buy back the shares from CZ. I asked him, what would compel you to do that? Why wouldn't you keep your assets on your balance sheet? And why would you offer this to just one shareholder? He said, because every time we went to get licensed in different jurisdictions, because you must understand the prize of crypto is to get regulated. For all the talk we say about Bitcoin and everything else, no institutions own this. I work for the sovereign wealth and pension plans. They don't touch this stuff because it's unregulated. Between these two, let's call them frenemies, because they obviously were potentially the two largest shareholders in the firm, they had a disagreement. They had a falling apart. Apparently, according to Sam Bankman-Fried, CZ would not comply with the regulators' request in these different geographies, these different jurisdictions, to provide the data that would clear them for a license. He withheld it, according to Sam Bankman-Fried. The only option the management and Sam Bankman-Fried had was to buy him out at an extraordinary valuation of close to $32 billion, less apparently a 15% discount. That stripped the balance sheet of assets. You ask me why it went bankrupt? Go to the last week. All of a sudden, in social media, CZ is asking for another $500 million. He wants to do a block trade of FTT, or the proprietary token of FTX. Wants it converted back to fiat. Why would you put that out there? You know it's going to push down the pressure. It's going to push down the value of that coin dramatically, and that's exactly what happened. Every trader knows that if you have a large block trade, you go negotiate a clearing price with other buyers and you do the transaction. In my view, my personal opinion, these two behemoths that own the unregulated market together and grew these incredible businesses in terms of growth were at war with each other. And one put the other out of business intentionally. Now, maybe there's nothing wrong with that. Maybe there's nothing wrong with love and war. But Binance is a massive, unregulated global monopoly now. They put FTX out of business. Now, lots of other reasons, I'm sure, but that's my personal opinion. That is what Sam Bankman-Fried told me in terms of where the assets went. Why should we care? Single reason. I'm a shareholder. You tell me the two largest shareholders do a transaction together, that's a related party transaction. I'm not sure that's okay. Maybe I want a Madoff clawback on those proceeds. Maybe I want to pursue that.
Mr. O'Leary, I'm sorry, you're about 3 minutes over. You have any follow-up, Senator Toomey?
I had another topic, so if we do a second round, I'll take it up then. Thank you, Mr.
Thank you. Senator Reid of Rhode Island.
Well, thank you very much. Hope that the events at FTX would, quote, put renewed focus on implementing domestic regulation. Do you agree that FTX customers and perhaps your own investments would have been better off if FTX had complied with the existing regulation we have that bars brokers from trading with customer funds?
Absolutely. But they were not compelled to do that because they were offshore and unregulated. I think the model will not work. There's examples of how regulated exchanges that are attached to broker-dealers have worked. You only have to look up to Canada, the OSC order, where BitBuy wallets are controlled by the regulator. They limit the number of tokens. They limit the margin. They limit the lending. They do an exhaustive test of proof of reserves. That's just the rules they implemented that they just copied from their own exchanges.
Right.
We need to do the same thing here. It works. It's been proven to work. There's millions of Canadians that have accounts that are working under a very strict regulatory environment. We can implement the same.
Well, I agree. Larry, in one of the answers to one of the other senators' questions, you said that the prize for crypto is to get regulated. Is that because it gives it credibility?
It can't exist for the institutional client. The potential of crypto is for it to be indexed with sovereign wealth and pension, where about 70% of the world's wealth is actually managed. There's great interest there, particularly around Bitcoin and Ethereum and a few other platforms, but they have no infrastructure to apply to their compliance platforms. When you are managing a $900 billion fund, every day you have a massive compliant infrastructure that marks to market all your positions. There is no infrastructure for crypto. I want to make a note here just around this regulatory issue that you're raising, and it's a good one. Of all the entities that went to zero, that went to bankruptcy in the FTX portfolio, the only one that is not bankrupt out of the 130 plus, and this is, probably the best evidence of why we need regulation, is Ledger X. Why? It's regulated by the CFTC. 100% regulated. It is not bankrupt. Had the other entities been regulated wherever they were, they would too not be bankrupt. And so just look at this. This is a use case of why we need regulation. There wouldn't be this tragedy and all of this drama and all the rest of this stuff and the loss of billions of dollars. The lack of regulation has caused some problems here, and it will continue to. And the evidence is right here. The only entity that didn't go to zero in the FTX portfolio, CFTC, forced the scrutiny, forced the transparency, forced the proof of where the assets were held and the reserves, forced the lack of commingling with the assets. They forced it. They did it. Proof positive that you can regulate this asset class.
I want to thank you all for being here today. We'll have some questions for the record, but I appreciate the hearing, Mr. Chairman.
A moment ago about the impact of regulation and the certainty that it could bring. And from your perspective as an investor, Mr. O'Leary, what needs to change here in Washington from a regulatory standpoint so that capital actually does flow to U.S.-based entities and empower U.S.-based entities to win on the global stage?
Every global platform, the #1 prize is to be regulated in the U.S. market, the #1 financial market on earth, period. Now, when you talk about other money center banks or other financial services industries that want to do business in the U.S., they must disclose their worldwide operations. They are scrutinized by the rules we already have in place. a coordinated effort between the Canadian regulator, the U.S. regulator, the ADGM in Abu Dhabi, the regulators in Singapore, basically laying out the ground rules for any entity that wishes to do business in the U.S. or any of those jurisdictions, solves this problem. If Binance is not willing to, and you started by talking about them, disclose, and the reason that Sam Bankman-Fried claims he spent $3 billion was that he could not get the regulators to approve the fact that Binance owned 20% of their platform. CZ was not cooperative with any of those regulators. He was shut out of those markets, and he realized the prize was to get regulated for institutional capital. Just having 4 or 5 markets coordinate, as we do already in other securities, solves this problem in perpetuity. And all these regulators talk to each other. I've been to Abu Dhabi. I've talked to the ADGM. I seek a license there. And I've done the same in Canada. I'm an investor in the license there. These are long-term, very sound structural concepts, but it needs a coordination. And in one phone call, we could solve this problem.